Hello and welcome to the Cryptocurrency News channel. This is going to the TAFA-MA of Christmas Eve, December 24th, 2021. We've only got a week left until the new year. Things are actually looking upward if you look at the graph. This little bump is a little bit more than I actually expected. And if you actually look at the bottom, this really wasn't much lower than the initial drop bottom. So it's a little different from this, where this bottom was this bottom and this bottom was significantly different from the initial drop bottom. And it does look like this trough is going to be very, very short-lived to me. We are above 50,000, which means we did close above a lot of the important markers. And like I said, I'm still betting on after New Year before any big movements. I could be wrong. Someone could take advantage of the very, very low liquidity tomorrow on Christmas Day, because no one's really going to be trading, and try to pump the markets up or sink the markets down. I somehow doubt it, but it is possible because there's going to be very low liquidity tomorrow. So someone could actually take advantage of that and actually really affect the markets that way. But for now, what it really looks like is that we have bottomed, and this lull will be nowhere near the 2-month lull, and probably only like a half a month or 3/4 of a month lull before we go back up. Remember, the last 2-month lull was because, once again, China shut down all the miners, and it took us a long time to get that hash rate back. But this time, we don't have that problem, once again, because we're already kind of getting some of that hash rate back. We did drop, but if you actually look at this, we're going back up pretty fast right now. So we're not going to get like a 50% drop in hash rate like we did last time. So we won't get that giant drop in price. Maybe we've seen the bottom already at around 45. I think like 45 and then 42 would be probably the absolute bottom it could drop to for any amount of time more than 5 seconds or 5 minutes. So I don't think that's going to happen. I do expect the week between Christmas and New Year to be fairly tame. That's because people are on vacation, obviously, and liquidity is going to be low and volumes are going to be low. But whales could unite together and really screw up the market because of the low liquidity. And because everyone's away, they might just surprise everyone and destroy people, because, that's what whales like to do because they're evil. Either way, if you look at the oscillators, the one I want to look at is the commodity channel index. It is over 100, which means it is overbought. The stochastic is actually overbought as well. The RSI is neutral. There's not much of a directional index, so it might be kind of overbought for now on the daily. Moving averages look a lot better. The 10 and the 20 are both positive because we're both above the SMAs and the EMAs for the 10 or 20, and usually the EMA is above the SMA and we're above the EMA, so that's double bullish for 10 and 20 days. Exponential moving average is still above simple moving average for the 30, but we're slightly below the exponential moving average for the 30. But since we're above the simple, I would give that overall in the 30 days a buy as well. So we have 10, 20, 30 as buys. And then 200 EMA, we also have buys. 50 and 100 are sell, but really for the really short term or the really long term, it looks like it's solid buy. So the moving averages for the daily are on a buy right now. So if you actually look at these moving averages, we should be slightly positive going forward into the new year for the next few days. That's what the numbers say right now. I don't expect too much movement. Maybe we'll go up like 1,000 or 2 before New Year's. But after New Year's, when people start getting back, I think that's when the movements are really going to start picking up. But the daily movements, from the daily technicals are definitely bending towards bullish for right now. But the oscillators do scream more bearish because they are overbought, and there's not a very strong average directional index. On the 1 week, the RSI and the stochastic are neutral, and the commodity index is also neutral. Very weak average directional index, which means we're not moving one way or the other. If you look at the exponential moving average for the 10 weeks, we're still a very hard sell. We're still about 1,000 or 2 below the EMA, and the EMA is below the SMA, so that is doubly sell. If you look at the 20 weeks, we're still pretty solid in the sell, but when you look at the 30 weeks now, that is a strong buy indicator. Of course, 50 and 100, that's a strong indicator. So if you're looking at the half year or year mark, it's still a buy. So, like I said, like I actually think the weekly is a kind of bullish myself because of the daily movements. But then again, the RSI for the dailies are sells, so it could actually be kind of a trap if you buy right now. However, if you're planning to hold on for 2, 3, 4 more months, it's not a bad idea to buy right now because if you're planning to hold on for that long, you will probably make money. But it is risky right now to actually buy for the next few days because the oscillators are indicating sell on the daily. However, like I said, if you're looking for the 6-month cycle, or the yearly cycle, it is definitely green right now and is definitely a buy. That's what the weekly is telling me. Monthly, it depends. If you're looking to buy for the rest of this month, I mean, once again, the daily indicators are more important, but if you're looking for a multi-month hold, it's a pretty strong buy. The oscillators are pretty still neutral. I mean, the stochastic is looking to be somewhat oversold almost, but the rest of everything else is neutral. The average directional index is not that strong for the monthly, so it doesn't indicate any kind of trend at this point. So the oscillators are still neutral. The moving averages are pretty much all buy right now because, the shortest one for the monthly is the 10-month average, and that's the only one I look at. And the 10-month average is still buy, which means we're still bullish on the 10-monthly cycle. And if you look at the hash rate and realize we're not going to go back down nearly as much as back in the mid-year, you will probably agree that we have some growing up to do. We only retraced about 30% this time, as opposed to over 60% back in the summer. Once again, since you don't have giant amounts of miners being kicked out, I don't think we have any real chance of going down that much again. And I don't really see, unless they pull off some Christmas nightmare, unless they can pull off a Christmas nightmare and the whales uniting Christmas, taking advantage of the low liquidity to really dump the market, unless that actually happens, I don't really see some kind of disaster happening. That could happen, but that's just more of a chance to buy at cheaper prices if they actually do that. Because eventually it is going to go up. The hash rate is reaching an all-time high again. And like I said, based on the hash rate and all the indicators, I do believe next year will be fairly bullish. So that's the news for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.